The home buying process can be overwhelming, whether it's your first time or not. The key to having a stress-free home buying process is to have a plan, be organized, and speak to an experienced mortgage broker like Effortless Mortgage. After helping countless Canadians successfully close their mortgages and own their homes, we've put together a blog on stress-free home buying. This video talks about 5 specific tips and steps and is a shortened version of our blog, which you can find on our website's Learning Center. The first step is to know your budget. To understand how much mortgage you can qualify for, you need to ask yourself the following. What is my credit score? 600 is the magic number. First-time home buyers should strive for a credit score between 650 and 680 or higher. The higher the credit score, the easier it is to get approved. Next, how much down payment do I have? The rule of thumb for down payment is if your credit score is greater than 600, a minimum 5% of the property price is required. If less than 600, 20% can be required. Next, what is my debt-to-income ratio? Basically, count up all your monthly debt expense payments and divide by your monthly income. Your income also determines how much mortgage you can qualify for. Mortgage lenders use total debt service or TDS ratio to calculate how much monthly payment you can service without stretching yourself too much. Our Effortless Mortgage advisor can help you understand how much mortgage you can qualify for and what type of mortgage options are available to you, whether your credit score is above or below 600 or you are self-employed. Second step is to get a mortgage pre-approval before you start house hunting. A mortgage pre-approval gives you the most accurate estimate on how much mortgage you can afford, the range of home prices you can bid on and put an offer on. It also saves you and your realtor time and helps you win the offer of the home you want. We advise first-time home buyers to stay within 5% of their pre-approved budget. For example, if you are pre-approved for a $500,000 home, you should only bid on homes between $475,000 and $525,000. And on your purchase offers, we advise you to include a financing and inspection condition to protect yourself from getting stuck in a bad deal. Once you've found a home and your offer has been accepted by the sellers, the third step is to finalize your mortgage approval with a commitment letter from a mortgage lender. Typically, purchase agreements have a 5-day financing condition. The clock starts ticking the moment you sign off on the purchase offer. It's time to firm up your mortgage pre-approval to approval. The only difference between a mortgage pre-approval and firm approval is that lenders need to review the property purchase. Once you have the accepted purchase offer, ensure you contact your mortgage advisor immediately and provide the following documents. Signed agreement of purchase of sales. Copy of property listing. Your mortgage advisor will review the home purchase documents and submit to the lender for firm approval. A firm approval from a lender involves the lender issuing you a mortgage commitment letter. When the lender issues you a mortgage commitment letter, it comes with conditions to fulfill. Your mortgage advisor will review and explain the terms of the commitment and the conditions with you. Conditions are what the lender requires to do their due diligence, which typically include income-related docs like letter of employment, T4s, recent pay stubs, proof of down payment by providing bank statements. Property details like an appraisal will need to get done. Debts to be paid, if any or necessary. Other documents like who is your lawyer going to be, a separation agreement, consumer proposal, or past bankruptcy if any pertains. If you're self-employed, there are other documents and conditions that will be required. It's important to start organizing these documents when you decide to start looking to buy a home and get a mortgage. The more organized you are, the faster and smoother the process will be. The Effortless Mortgage team is available 7 days a week. Please ask questions. Now it's time to close your mortgage. Buying a new house is a big change in your life. It is very tempting to adjust your lifestyle as well. Not so fast. Interestingly, many people feel the urge to buy a new car around the same time as the home purchase. What comes with a new car is a new car loan or lease payment, which is reported on your credit report and impacts your credit score. Don't do it. Don't get a new car, new credit card, etc. Just wait until after you are in your home. Next, plan and budget for closing costs, which is approximately 1.5% of the purchase price. Ask your advisor. Closing costs typically include land transfer tax, lawyer fees, title insurance, moving costs, etc. Next, schedule a house visit. Your purchase offer generally comes with 1 to 2 visits to the house before closing. Use it wisely to plan the move, renovations, etc. And lastly, stay in touch with your mortgage advisor and lawyer to avoid any surprises along the way. If you're looking to boost your credit score to improve your mortgage terms and options, visit our Effortless Mortgage YouTube channel to find our video on how to boost your credit score fast. Learn more about your mortgage options. Visit effortlessmortgage.ca